building out our platform, focused primarily on reading through earnings call transcripts, SEC filings, news, broker research, then extending into emails and other types of proprietary documents that our clients might have, and a very broad-based model to identify hundreds, if not thousands, of business-related topics, and make those available to our clients and work with our clients to build customized models. I'm really going to spend one more minute. Sorry, go back. We have a great list of clients that we work with, ranging, and this is mostly in the financial space, firms that manage money systematically, large asset managers, insurance companies, and a few individual corporations as well. So I'm going to quit with the company overview and the sales pitch and turn it over to Bennett, and happy to answer questions about the company at the end of the presentation. So with that, I hand it to Bennett.
Thank you, Steve. So I've been tasked with explaining several of the problems that come with using natural language processing techniques on text, specifically for financial use cases. A lot of the low-hanging fruit has really been tackled when it comes to leveraging new data sources along with the digitization of the world, so things like transactional data. But there's this whole goldmine of emails, files, PDFs, transcriptions out there that we understand has a lot of untapped potential. I say goldmine because it's true that at the same time, there's all this potential, but because it's unstructured, there's also all of the problems. Things like it's difficult to manage. So how do you process the 1.5 million news articles that our data aggregators send up every day? It's a big infrastructure setup. How do you then integrate that data sources with all of your different infrastructure and data sources in your system? And then finally, the most important question, how do you actually act on it? And it's true that the tools are maturing, but the urgency is also growing. So let's begin with unstructured data. And when you think about structuring unstructured data, really several different paths that you can go along. One gets you to extractions, where you can read only the most important information in a given document or text and actually go to the underlying data. You can also turn unstructured data into a signal, whether that's a component of one of your trading strategies, or in some cases, ability to track a brand over time looking at sentiment. You can also do things like data retrieval, which is pulling information. For example, the checkbox checked in a 10K, the certification signed, all the table data points extracted that are meaningful, that are trapped in a PDF. If you have structured data, ironically, you can also turn it into some unstructured text. Do things like doing data retrieval and data review, and then also natural language generation. What I'm going to talk about today is really a component of extraction and understanding in extractions how you can pull only the most important information and have it be accurate. So let's take this first. At its very core, highly successful top selling seems quite positive. But when you start to add additional context around it, you can see that it's actually a sentence around Toyota announcing a voluntary recall of their highly successful top-selling 2010 model year cars, which is arguably the most negative thing that could be happening to Toyota. And being able to tell that it's negative is a core task in the field of NLP called sentiment analysis. And sentiment analysis normally occurs at a document or sentence level using a dictionary-based lookup or more of an ML-based approach. At Amenity, we think that in order to play in the financial space, you need to take a slightly different lens on sentiment analysis. So what we do is thematic sentiment analysis, also called aspect-level sentiment analysis, and it occurs when different topics are extracted from text, and then the sentiment for each topic is evaluated. And that allows you to do a few different things. A, see the sentiment per target event. You can also then boil all those target events up into an overall sentiment score for the documents that you're interested in. When dealing in finance, trust is fragile, so being able to look at events like Toyota announcing voluntary recall and understand that this is a recall event is a big differentiator. It allows you to build a more accurate data set that provides more actionable insights and addresses that third problem of how do you act on it. In order to act, you have to trust that it's accurate, and taking a sentiment approach like this allows you to do that. It's not just recall. What we've done is provide the ability to, on an event like this, understand that it's negative because it's a recall, differentiate from many of our competitors that would understand that it's positive based on that dictionary-based lookup, for example, that I mentioned earlier. And then take that across the board. So over the several years, we've developed a robust taxonomy with really core themes that matter in finance. These are things like earnings factors, business trends, customer traffic increasing. I'll talk about some of these in use cases later on. But to note, with employment, being able to understand the nuances between a CEO change and an executive change is quite difficult. Being able to take a sentence like Jim resigned from his position as CEO and also gave up his board seat and understand that those are two different instances of meaningful mention of employment changes within one sentence is also critical in building that data set. And we do this through a combination of unsupervised and supervised tasks, leveraging another core fundamental task in NLP, which is named entity recognition. On this slide, you can see several sentences that all have the same core pattern. Some word on the positive side of the balance sheet, like income, sales, profit margin, growth, EBITDA, and then this action, meaning increase, to rise. What we can do is, around that core pattern, see all the different entities that provide additional context to what's actually going on there. So Apple's income rose today, the base layer. There's not that much more information aside from the organization, Apple, and that sense. So we'll classify it as financial commentary. You can also see that Ford sales increased 7% from the prior quarter is a financial result. We know it's financial result because of that 7% entity being an additional way that we understand that it's quite specific. From the third example, China's profit margin advanced to a record high 7%. Here, we recognize that China is one of our EM entities. So because it's kind of that core pattern, we understand that it's a more specific geographic event that we can tie rather than just being a financial. Moving on to the more sophisticated example, Nike China's EBITDA climbed 1.5% versus the estimated 5%. If you just look at the beginning of that sentence, you understand that it's a positive EBITDA climbing of that 1.5%, but as soon as you understand that it climbed versus the estimated 5, now you understand that it's actually an emerging market financial expectation to miss. So let's actually talk about how this plays out in practice. Once you have the ability to be very granular in your identification of this particular theme that is going on in the text, you can actually start to solve some business problems. I'm going to walk through 3 different, I want to pause at that point before we go into use cases. Does anyone on the line have any questions?
And sorry to interrupt, Bennett. I just want to let everyone know that if you do have questions, there's a bubble on the right side of your screen with a question mark. If you click that, it should open a pane to allow you to type in questions, which you can do at any time during the webinar, and we'll address them at the end. So I just wanted to let people start, if they have questions, to ask them in real time. So feel free to press that bubble and then type in your questions in the pane. Thank you. Go ahead, Bennett.
No, thanks, Steve. Asking questions is one of the action problems as well. So in this case, I'm going to talk about 3 different case studies, starting with RealPage. And RealPage is an MNC that provides property management software solutions. It's actually quite interesting because we noticed in 2014, to foreshadow a little bit, there's a trade-off between growth and margins that they decided to make. But first, let's take a step back and look at some of the ways that we're able to make that claim. And it involves using those NLP techniques that I just talked about. On the left side of your screen, you can see that we're capturing a margin result, margin expansion of 210 basis points. Because it's a specific amount, we're able to classify that as results rather than just commentary and be able to treat it differently in our algorithms. On the right, we have a new product line, but we understand that it's historical because they're saying that in June 20, published in 2018, and doing that temporal comparison allows us to build an accurate data set again. So why do we know that they top left extraction, they were talking about customer traffic? Because in order to execute on our strategy of acquiring new customers, which reaffirms our really motivated by that organic growth story of increasing customer traffic. In 2014, the story changed. They had higher capital expenditures, they increased expenses, and they understood that the cost of that expanded development was depressing their earnings. Being able to classify all this negative financial commentary allows us to then look at it over time. And you can see that leading up until 2014, you saw a spike in that negative financial results conversation. Reduced negative results after that, and we saw that that rapid expansion coincided with an increase in the conversation around margins. And management reaffirmed this in their commentary. They said things like they're moving on and focusing on minimizing expense growth and optimizing operations resulted in significant margin expansion. The interesting thing about RealPage is that while they continued to generate shareholder value at the same rate as before, even though they had shifted to margins, which is what gave them those positive financial results and decreased the negative financial results. We can actually see the shifting strategy play out in real time, because in conjunction with that decrease in negative financial results, we saw a decrease in one of the events that speaks to organic growth, new product discussion. Around that same time period that we saw margins increase in 2014, they decreased commentary on the new products that they were releasing. This is in stark contrast to 2011, when they were saying things that they believe that their new products are really going to drive customer demand, and they constantly expand and improve their products. So something definitely happened here. And with RealPage, it's a company that was successful both before 2014, 2015, and after 2015. Value at the same rate as before. If we think that shareholders, in some sense, are paying for growth, we have to understand the shift from organic growth as measured by this new product discussion to more inorganic measures of growth. So during that time period, you can see that new product discussion decreased. And simultaneously, the count of merger acquisition comments acquisition companies like American Utility Management, Axiometrics, and TwistHead. And during that time period, they had the noticeable shift both in M&A and also in alternative capital return measures. So things like stock buybacks and dividend discussions also increased during that time, which suggests that they were using capital not to invest in new products, but in buying back stock. And being able to understand not just the overall sentiment of this company, which is positive throughout this time period, but the actual themes that are driving that growth, whether it's that new products, whether it's the customer acquisition, whether it's the merger discussion, or in this case, the count of buyback and dividend discussion, allows us to enrich our understanding of RealPage as a company. Thematic sentiment analysis doesn't just stop with some of the traditional financial metrics that we just touched on, M&A, new products. We're also able to pick out unique identifiers that we think drive significant value to our clients. Things like understanding when a CCO suite or executive management isn't being entirely candid in their response to the analyst community. We call it our deceptive language trap. In 2016 Q4, IBM had a unique earnings call, layered with statements that we don't know yet. As we've said a number of times, there's plenty of work for us to do. In sum, we captured a very clear spike from their normal level of deception speed. And we say deception, in some sense, every call will have some type of deceptive language, but it's quite clear when you have an abnormal jump in the amount of deceptive language that something is going on here. Classifying these language patterns into a taxonomy of evasive, detours, vague commentary allows us to understand that time series of a deception store. You can see that particularly in this call, IBM reported better revenue, and yet we saw that shares were down in conjunction with a spike in that deception store. So we're able to notify anybody who covers IBM or covers similar companies, and we often see stocks jump on the days after calls that also have a spike in deception score, that something may be going on there that management doesn't really want to answer in questions, alternatively doesn't have a clear answer for. The analyst community and being able to understand the differential between the questions and the type of sentiment that the analyst community is asking and the answers the management is providing is an additional way to understand an earnings call. We think this type of sentiment analysis is quite powerful because even if you're on the call, there may be that itch feeling at the back of your mind that you missed something, and being able to use natural language processing techniques in order to capture those nuances that you might otherwise have missed allows you to add value and allows you to make better informed decisions. Let's also talk about ESG. We know that ESG is one of the hottest subjects in finance right now, so we'll give it some time in today's talk. And it's important to understand ESG not only from the perspective of the traditional players like MSCI Analytics that are capturing information about how a company is doing based on a lot of company reported information. So how many individuals are on the board that are diverse? How much are they actually emitting, and what is their pollution metrics? This is all really important information. But we similarly realized that there's this boon of unstructured text that you can leverage in order to increase and enrich your understanding on a company's actual performance. Looking at Subaru as a case study, we're able to go into our analytics page and really drill down into news or into other data sources of unstructured text and discover the ESG insights that you may be missing about a particular company. For example, one of our ESG dashboards provides the ability to drill into the auto sector, look at how the set of companies really compares against each other, and then go to our top performer in that sector, which is Subaru. You can see that they have an overall quite positive ESG score, but there's just one negative outlier of negative governance. We provide the ability to then go granular to the underlying data. You can see that a local Subaru dealership achieved eco-friendly retailer status, that they have achieved the eco-friendly retailer award. If we wanted to understand that negative story that we noted on the summary page, you can drill down and actually understand that scandal of corruption event, where we see quite quickly that Subaru had a scandal in its home market of Japan and is trying to regain the trust of buyers. And this is the type of ESG insight that allows you to enrich your perspective on a company that you might not have had that full lens into. Everybody knows about the Volkswagen scandal. The Subaru one was less so. And that's not to say that they're not a good ESG company. They're still at the top of the auto sector. It's just to understand that there's more nuance to all of these firms. And looking into text allows you to build that nuance and make a more educated decision on an investment decision. In order to have the ability to go to that underlying text, you have to be accurate. Being able to capture on the right a high AUM per employee and understand that this is a completely immaterial ESG event versus recruitment and retention on the left, a high rate of employee attrition is a common theme. One of these is material to the company and another is not from the ESG sense. You have to be able to only capture the meaningful instances of ESG buzzwords because the company is saying our diversity is increasing at a high level may be positive, but not every mention of just the ESG buzzword like diversity is similarly going to be meaningful from that company's perspective. You have to understand the full semantic and syntactic relationships between words in order to make those claims. That references back to what I was talking about earlier with unstructured text, where by understanding the important patterns and then the entities around them, you're able to make more sophisticated semantic judgments and then assign sentiment based on that aspect level. For one client, we're tasked with being able to differentiate between meaningful mentions that were driven by the company versus those that were driven by a more macro factor. So on the left, you can see that this is a company that is actually making a minimum wage increase. On the right, it's a company that had a minimum wage increase that was forced because California put in place a series of laws that mandated that they increase their wages. One, again, is material for the company, one isn't. In order to trust an ESG analysis, in order to trust any data set, frankly, you have to be able to go to that underlying data and validate that it's actually telling you what you think should be. So we're back to unstructured data. And the moral of the story here is that even though it's complicated, because it's difficult to manage, because it's difficult to integrate, and because it's difficult to actually act on it, there are several different ways that you can use and techniques that you can use to make that impact and to drive that impact from natural language processing. And what we think at Amenity is that it's not as simple as downloading a NLP toolkit or using a open source NLP software. Although you can use those tools to get to 50–60% levels of accuracy, at the end of the day, in order to turn on solutions in production, you have to take it a step further. And in order to take it a step further, we think that you need to apply a unique and novel sentiment approach that allows you to trust the underlying data. When you have that, you can tell the interesting stories that we just told. Looking at RealPage, as you can actually see the transition from organic growth driven by new product development that was increasing their number of individuals that were using their solutions, to that focus on margins, and then the shift to inorganic growth driven by M&A activity and stock buybacks. You can understand with ESG, a company that, while at the top of the sector, has more going on than you might have thought. You can also understand really complicated things that you can't measure by just reading a call, like deception, and be alerted across time when a company is in danger because we captured a high deception score. That's why unstructured data is so important, because it opens up new avenues of analysis that previously were untapped. And that's why we think that leveraging unstructured data is a gold mine that has to be taken advantage of. So that concludes the use cases and overview that we had planned for today. We see that there's been a couple questions that have been coming in, so we're happy to answer some of those at this time. I'll turn it back over to Steve.
Yeah, and again, if you have additional questions, feel free to, on the right side of your screen, hit the question bubble, the question mark bubble, and it'll give you a place to type in a question to us. If you want us to only get back to you privately, you can also just write us a message to reach out to you after the call. But then we do have one question here about deception. Does the deception analysis track universal deceptive behavior language, or does the deceptive language tend to vary on a case-by-case basis for each individual company?
Okay, yeah, that's quite an interesting question. So I think that there's a few ways that we measure deception. One, universal language patterns. So if somebody doesn't want to answer a question, they might stop. They might say, think that's quite an interesting question, and then take time to collect their thoughts. And that's indicative that they might not have an answer at the ready, and that they have to think about it a little bit more. Things like being aggressive to analysts, saying, I don't want to answer that, I'm not going to answer it, are additional ways that you can track universally analysts and management commentary. We also have the ability to look at it from a variety of different perspectives and create unique proxies for deception beyond those that I showed you here today. So for example, looking at the QVA score, or the questions versus answers score, see if the sentiment of the questions is different than the sentiment of the answers. And if there's a spike where the questions are quite negative, but the answers are quite positive, and that's different than the normal course of discourse for that company, you might also be able to isolate an instance where a firm is showing something that they don't really want the analyst community to know about. So we've built a model here that, moving forward, looks for these universal cues that we found to be quite powerful in explaining company movements in terms of their deception scores.
Great, thanks, Bennett. Next question we got is one I can take. What does ESG stand for? It stands for environmental, social, and